Hello guys, welcome back to the Brutal Master channel. I hope you guys are having a fantastic day today. In this episode, we're going to do something a little bit different from our crypto videos, and we'll be covering a popular US ETF, which is an exchange traded fund which tracks the price of over 500 different company stocks, and this is called S&P 500, right? So again, before talking about S&P 500, I want to talk to you guys about Wealthsimple. So for some reason, I can't really access the Wealthsimple website right now on my mobile phone. But when you go to their website, wealthsimple.com, it's basically a platform that you can download on your phone in order to basically buy, sell, and trade stocks, ETFs, as well as crypto as well, right? So this is a platform that's specifically catered to Canadians, but people outside of Canada can also use this platform. And Wealthsimple has over millions of customers, and it provides an easy onboarding option for people to get into investing. Since we have the market going down right now, this is the best opportunity to invest if you're looking to invest, right? And what better way to start by using an app such as Wealthsimple that you can download from Google Play or Apple Store on your phone and fund your account and easily start trading Canadian stocks and ETFs, as well as US stocks and ETFs as well, right? So for Canadian stocks and ETFs, you won't have any fee when you trade, but for US stocks and ETFs, if you have a premium account, you won't have to pay any fee. Otherwise, there will be there's a small fee for trading, right? But what are the benefits of Wealthsimple account? So if you have a Wealthsimple account, you can actually use Wealthsimple to do basic trading or learn trading because it's a very user-friendly platform that provides you with a lot of benefits in order to on-ramp you into investing. And once you're comfortable with Wealthsimple, you can actually go to a much more complex platform if you want to trade or do much more complicated stuff, right? So if you use the link in the description to set up a Wealthsimple account, you can get up to $3,000, which is in Canadian dollars, in order to buy stocks or ETFs or crypto. You may usually get below $100, but there have been instances where people have gotten more than $100 to $150 when it comes to welcome bonus. Some of them are even lucky enough to get a $3,000 in welcome bonus, right? So you can basically get it in a kind of like a raffle, and they will give you a specific amount in your account which you can easily use to start trading right away, right? And by using the link in the description to setting up a Wealthsimple account, you're also supporting the Brutal Investor channel, for which I thank in advance. So going back to the Yahoo Finance page for S&P 500. So since this is going to be an ETF, I'm going to basically skim through all the information. It is a very popular ETF, so a lot of you guys may already be knowing how to use or how to buy and sell, and maybe even you guys are experts in predicting where the S&P 500 will be in the next 2, 3, 5 as well as 10 years from now. But this is only going to be a peripheral analysis, and it will provide you with some of my thoughts and opinions. This is not considered as financial advice, and therefore please don't consider it as financial advice and do anything that I mentioned to you without having to do your own research, right? So if you go to their website, which is yahoofinance.com, which is the best place for you to research stocks and ETFs, you can actually go there and search for S&P 500. So S&P real-time currency, it's in US dollars. So the current price is $3,873.33, and as of Friday, it has lost 0.72%, which is about $28.02 just since Friday itself, right? So if you look at the chart, you can see that the ETF has been going sideways. So this kind of represents the entire popular 500 companies in the US, and this kind of reflects the overall global economy as well, because people use this as a metric to analyze the potential prediction of stock prices in the future, as well as predict recessions, as well as the performance of companies as well, right? So this is a very good indicator, this ETF, and if you have some form of exposure to this ETF, not only will you be able to outperform each and every individual stock, which is scientifically proven, you will also be able to have a small piece of the top 500 companies from the US, right? So this is a very important ETF that I personally believe everybody should have, but again, it's not financial advice, so please don't just invest into it blindly because I'm telling you, right? So if you scroll below, first of all, you can see the summary page on the Yahoo Finance page, and you can see the charts. We'll go through that in detail in a few seconds. So the previous closing price was $3,901.35. Again, this is all in US dollars. So this is the previous closing price as of Friday, since yesterday, and the opening price was 3,880.95. The volume is $4.3 billion. So clearly a lot of people are trading S&P 500. A lot of people, when they enter into the investing era or investing like stage, they basically try to buy stocks that they personally think that they will be performing well in the future. But most likely they tend to pick stocks that perform worse than the market, right? So recently, since 2020 onwards, there's been a trend where people are literally just putting their money on S&P 500 and forgetting about it, because usually S&P 500 outperforms the market by about 7% or 8% in returns, and it is pretty much sufficient to kind of like estimate the growth of different kind of like stocks, as well as the fact that the S&P 500 is a full representation. So by buying one share or one ETF of S&P 500, you're basically exposed to pretty much every single company, right? That's popular in the US, the top 500 companies. So many people are starting to buy that, and that's one of the reasons why the volume has significantly increased. And you can clearly see that there's $4.3 billion in trading volume that happened just in one day, right? So the day's range, the overall range in price per share was $3,837 all the way to $3,880, which is pretty wide of a range for a share that has been like a kind of like a selection of multiple different shares. Even though I may say that this is a wide range, it's actually much more of a narrower range in the grand scheme of things, right? So you can clearly see that either one or two companies in the S&P 500 may be performing poorly, but if all the other companies perform well, there's a data skewed which kind of affects the overall price, right? So I think overall, if you see the S&P 500 usually trades in a very narrow range between let's say $20 to $30, but here you can see that they have the trading volume as of Friday has been $3,837 in the lower end, as well as $3,880 in the higher end. So the gap has been quite decent, and this kind of indicates that the market is quite volatile and there's a lot of uncertainty coming into the market, right? So the 52-week range has been 3,636.87 and $4,818.62. So clearly you can see the 52-week range is a much broader deviation from the typical $3,800 or $3,700 range. So clearly the ETF has kind of like gone all the way to 3,600 to 4,800 due to several markets expecting the interest rate hike as well as the uncertain recession period that we are in right now, right? So clearly this is clearly reflective of how volatile the market has been since the the 52-week range. So the average volume is usually $3.6 billion, but if you see, the daily volume is higher than the average volume, because a lot of people, as I said, are starting to buy S&P 500 because they want to get exposure to everything rather than just one or two or three stocks, right? So that's clearly reflective of the fact that a lot of people are eager to buy S&P 500 instead of just holding on to a few stocks. So you can go through information below to get more value from learning what kind of stocks are, what's the estimates and what are the the exposure for each ETF of S&P 500. But I'm just going to skip through this because this is kind of like the general summary of this particular ETF, right? So when you go to conversation, so a lot of people will be speaking out about the the recession, as well as how it's going to affect the entire market and economy. So a lot of people who are critiques of the current monetary system will use S&P 500 as a major tool to gauge where the direction of the economy is going to be in the next 5 to 10 years from now. And if you scroll below, clearly this page does not really have the conversations, but if you go to Twitter accounts and search for S&P 500, you will see a lot of people talking about a lot of uncertain information when it comes to recession, and how the markets are going to go down even further, and how people are going to start pulling their money in order to pay their mortgages, their high interest rates that they've managed to accumulate after the the increase in interest rate, and a lot of people are having basically negative comments when it comes to the future of the market itself, right? So clearly there's a lot of negative sentiment currently for S&P 500. This does truly reflect the entire US economy as well as the global economy as a whole, and will also be a caution for people who are trying to take too much leverage on their housing and trying to buy bigger mortgages, right? So there's a lot of incentives that there's a lot of information that you can get from Twitter account if you go to Twitter and search for S&P 500, right? So let's go to the historical data. So if you look at the historical data, you can basically select a date range and find historical prices. The frequency is daily. You can select those variables easily, and you can see on a daily basis the opening price, closing price, as well as the high and low, as well as the volume as well, right? As you can see, the volume has been all over the place. It kind of has an average volume of $3.8 billion, but recently the ETF saw a big surge in volume, about $7.9 billion as of September 16th, indicating that a lot of uncertain people who are panicking are trying to get massive exposure to every company instead of just trying to get one or two stocks, right? So clearly this is an indication that people are going to be buying more and more ETFs than individual stocks, which is a bad thing for stocks, because they'll be, if they have a position with the stock, they'll be dumping it and they'll be buying an ETF just to kind of not have to actively manage a particular stock or a portfolio, right? So, and you can clearly see that the volume is only going to get expected to be higher in the next few days, and on the opening period of Monday, you can expect to see the volume to be increasing as well, which is also going to reflect the currency data that we described right now, right? And if you look at options, again, it's not really relevant to this video, you can skip through that. But components wise, again, there's no real data available for this for some reason, but you can refresh it to see what other information you can get for S&P 500, and I don't think there's any information available as of now. But when you maybe open on your desktop browser, you'll probably be able to see some of the components of S&P 500 that you'll be able to use to do your own research, right? So let's go to the summary page for the S&P 500. And if you see, the price per ETF is $3,873.33. Again, it's quite expensive, but it represents pretty much every single popular company in the US, the top 500. And I personally feel like everyone should have at least a small amount of exposure to this particular ETF, right? Because it is definitely reflective of everything that's happening not only in the US but also on the global market. And if you scroll below, you can see the maximum chart. The ETF has performed extremely well due to the pandemic inflationary environment, but I think now that the deflationary environment is starting to kick in, you will expect to see this ETF go down significantly, right? A lot of people are expecting that this ETF is going to go down as low as $3,400 or maybe even lower than that. And as you can see from the previous economic crises, you can clearly see that there's been a sharp decline, but then like an immediate rebound of the price. And this was during the major collapse of the banking sector back in 2008, which led to the creation of bitcoins and several other cryptocurrencies. But now, if you see, the markets have recovered, and then during the COVID pandemic, the all-time high for this particular ETF was $4,522 per ETF, and since then it's been declining. So clearly there's a opportunity to buy it at a good price, and if you're trying to buy it at this price point, you're still going to get good exposure to all the stocks. And if you're trying to buy it at this price point, you probably might want to wait a little bit. If you want to get a better price point, you can probably expect to get this ETF going as low as $3,400 in the next few months, maybe even by the end of next year, right? So this basic scenario is going to be reflected in all individual stocks, but since ETFs are not really impacted that hard, you won't see any further major drop in the ETF for S&P 500, right? But again, if you believe in the market cycle, you can easily expect this ETF to go back up, because as you can see in the previous scenarios, there was a big dip and then there's a smooth uptrend, and this has happened pretty much to all of the stocks, which is what S&P 500 is reflecting, and it reaches an all-time high and then it dips again. So this cycle basically is going to indicate a much more prominent as well as important dip, because we haven't seen inflation this high in several decades, and I think this is going to be a big opportunity for people to buy this ETF for a very good discounted price, if they believe that this ETF is going to go up. Again, this ETF is not really just a ETF that you should be just buying. You can obviously focus on individual stocks, but I think the ETF is kind of like a very safe and predictable haven, where you can expect to make 7 to 8% returns for S&P 500 alone, right? So clearly there's a lot of high positives when it comes to S&P 500 rebounding and going back up in the next 5 to 10 years from now. I think there's a lot of opportunities for the S&P 500 to go above the $5,000 to $6,000 per ETF, but that will happen maybe in the next 3 to 5 years from now. And in the long term, the longer you hold it, the more exposure you'll get and the more growth you'll see, because a lot of markets are already starting to slowly rebound. Even though that's not really reflected in S&P 500, you'll probably be able to see that in the next few maybe a few years from now, right? So again, that's pretty much my opinion, guys. I feel like this particular ETF will go down a little bit further, reach the $3,400 mark. Buying it at that price or even at this price is still pretty good, because you're pretty much buying it at a pretty good discount from the all-time high. I don't think, like crypto, you can expect this to go really volatile on you, so you basically get some form of stability and predictability. But if you buy it, you basically set it and forget it, you will probably be able to get a huge chunk of profit in the future once this particular ETF reaches like $5,000 to $6,000, because the economy is only going to continue to grow after the recession, and it will probably grow even stronger, and the S&P 500 will clearly reflect that in its price, right? So again, that's just my personal opinion, guys, not finished advice. Please do your own research before you put your hard-earned money on this token, right? Again, remember, guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.